Alright, welcome back. I'm Joel, the working man trader. I trade clean structure, no height, no signals, no indicators, just simple mechanical price action that works for real people. And today I'm going to break down the exact model I use every single day to trade NQ, ES, gold, and stock options. And this is the foundation of everything I teach. And the market only does a few things. It grabs liquidity, it shows structure, you see here, it pulls back, it expands, and then continues. If you can read those phases, you can trade. You don't need 20 indicators or a bunch of fancy tools. My model is built around 6 core concepts: a break of structure, sweeps, displacement, reclaim, some zones, and timing windows. And once you understand these, the chart becomes simple. So let's start with a BOS, or a break of structure. Break of structure tells you the direction. It tells you intent. It tells you which side the market is targeting. A bullish break of structure, as you see here, tells you the price market wants to go higher. A bearish break of structure, as you see here, tells you the market wants to go lower. But here is the key. The break of structure is not an entry. It's just the first clue, what the market wants to do. Now, what are we looking for next? We're also looking for liquidity and sweeps, as we see here. The market takes this liquidity before it makes the move. Equal highs, equal lows, double taps, compression shelves, as you see here, all of that is fuel. And as you keep looking, you can continue to see this happen over and over again. You get all these little compression zones, and then the move happens. If liquidity hasn't been taken, the move isn't ready. And this is why so many traders get trapped, just like we see here. The sweep is the setup. And the move comes afterwards. Now, this next one is called displacement. And this is going to be something I think maybe some people mistake this a little bit, but now displacement, this is normally the first candle of a big move. And what does it normally do? Well, let me find yesterday is a prime example of what happens to people. And this was on the 10th of July here, but it's the big candle you see here. This is market open, full body, hardly any hesitation. Same one here. It's a big candle. Leaves the imbalance, breaks the structure, and shows its intent. But this is not the entry. It's just a signal. It tells you the market has chosen a direction. It broke structure. It displaced, left the imbalance. Let's see here. But if you chase this, as I'm sure many people probably did yesterday morning, chase this one, they probably chase this one. Oh gosh, the market's going. You're entering at the worst price. The actual trade will come after this happens, because if you entered here or you entered here, you more than likely got stopped out here, because this came down and swept all the liquidity. Same thing here. After this one, everything got swept. This swept everything. So if you chase those candles, you're in trouble. Remember, the real trade will come after those happen, and you watch for the setup. The reclaim is where the real trade happens. Price pulls back, as we see here, and we see here, out of this level. It returns to the zone, as we see here, and rejects cleanly. And it did it here again. We reclaimed, rejected cleanly, and then confirmed direction. This is the entry model foundation. Reclaims the difference between guessing and trading with structure. Now, zones. I have some zones. I don't have them marked out on here, but demand, supply, timing zones, and high time frame zones. So where would our demand be for today? Well, it's right here. Here's our demand for the day. And you need to mark out pre-market demand, overnight demand, Asia, London, if you're trading futures. Now, if you're trading stocks, it's different. But these demand zones form when liquidity has been taken. You can see here, and here, and here. Price rejects and displacement leaves the area. Excuse me. As it leaves this area, you see, there we went. Same here, same here. Continuation usually follows out of your demand. Now, a supply zone is the very opposite. And let's find a supply zone. Here is a supply zone right here. Yesterday. Right here's one. Oh, let me get right here is a supply zone. This is yesterday, which would be Thursday at 12:25 p.m. This is our supply zone up here. And you see, we never broke it above it, so it is still valid at this point. And it does the same exact thing. They form when liquidity's been taken up here, price rejects the area, and displacement out. And continuation will follow. Now, timing zones. Now, I'm going to give this to you in central time. So, for futures and stocks, the timing zones are 7 to 7:15. You need to watch that time. You need to watch that first 15 minutes there. You need to watch the 8:30 to 8:45. That's the cash market open. That's when we have some potential news expansion. And there's also some high time frame zones that give you the macro direction. And these zones are going to tell you where the market will make its decision. Now, the timing window from 7 to 8, timing is going to matter. And if you don't have timing with your structure, it's going to be incomplete. And I use these windows every day, 7 to 7:15. I always mark that out. 8:30 to 8:45, 9:30 to 10, cash session continuation. That 8:30 to 8:45 can be an expansion. Then noon to 1 is a midday reversal. And 1:30 to 2:30 can be the afternoon continuation. If you trade outside these windows, more than likely you're trading a lot of money. Now, the continuation from the 8 to 9 a.m. continuation is where your best trades will come from. After a reclaim, after the displacement, after a zone respect, and after a timing alignment. That's the clean move. Continuation trades are simple, mechanical, and repeatable. And this is where you're going to build your consistency. So, if you put all of this together, the entire model that I do is simple. You look for liquidity sweeps, a break of structure, displacement, zone identification, reclaim, and a continuation. And that's it. It's clean structure model I use every day. Simple, it's mechanical, and it's repeatable. Now, if you found this helpful, subscribe and check out the live streams when I'm on. And I'll trade this model every day, every morning. I'm Joel, the Working Man Trader. Keep structure simple.